This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. Man, so much stuff is crazy. I must say, as a side note, before I get rolling today on crazy, Ken Burns' new documentary, 18 hours, 10 episodes on the Vietnam War. A fascinating take on how that went down. $30 million budget, supposedly 10 years in the making. The entire conflict, though, came down to clear thinking. Was there clear thinking? Could one understand from all the assorted pieces of fundamental information that McNamara was so well known for assembling? Could all of that tell you whether you were going to win? Or was there a trend? Was there a trend line that you could follow? So for all of the data, all of those numbers that McNamara put together to give to the presidents that he served, JFK, LBJ, and at the exact same time, on a parallel track, there was a trend that said the numbers, all that fundamental information, doesn't tell the complete story. I implore everyone to take a look at this documentary. It's a great exercise for practicing critical thinking. And that's where I want to go today, critical thinking. Well, first, as I mentioned with my opening music, I'm feeling a little crazy. That's not necessarily unusual, but crazy in a very defined, specific way today. Crazy about the fundamentals. Crazy about the idea that you out there, Mr. Such and Such, Mrs. Such and Such, that you think you can assemble enough fundamental information, the PE ratios, the crop reports, this supply, that demand, this metric, this piece of information from a board call. All of this stuff will supposedly tell you when to buy, when to sell, how much to risk, and how to do it over a portfolio on an ongoing basis where you do better than passive indexing. I want someone to show me that. Before I dive in too deep, though, let me put a quotation out from Mark Rzepczynski, someone who has appeared on this podcast, a very wise man. This is a passage that I put in my newest edition of Trend Following. I put it in the side margin. And if you've not yet seen the newest edition of Trend Following, the massive hardcover edition, you should check it out. It will make more sense as I describe, for example, a side margin quote that I'm going to read right now from Mark. From Mark, there are only a limited number of Fed meetings a year. However, this is supposed to help us infer the direction of interest rates and help us manage risk on a daily basis. How do you manage risk in markets that move 24 hours a day when the fundamental inputs do not come frequently? Question mark. In the grain markets, crop reports are fairly limited, and demand information comes with significant lags, if at all. Under these types of conditions, simple approaches, such as following prices, may be better. Now, you might think, when you hear that, the key point is the fundamental information that Mark is pointing out only has so much usability. Agree 100%. But the interesting word that he uses, simple approaches. I might want to pick a little bone here. Obviously, Mark is referring to trend following trading. And yes, it's simple in the sense that, hey, let's sit down and map out on a table, on a piece of paper, what is trend following? Let's write it out. Let's explain it. Let's put forward a system that you could follow consistently over all these diverse markets and have your consistent entry, exit, risk management. Yes, that's fairly straightforward. Simple, even, if you will. But is the mindset simple? Is the mindset to adopt trend following, the price approach that Mark refers to, is that simple? Well, of course, that's not simple. In fact, it's terribly complicated for people that have been indoctrinated into something else. And they have surely been indoctrinated into something else. Like McNamara, they want all of this data. All of this data. Give me the never-ending data. Watch those old videos of McNamara sitting at a chalkboard or an easel. And he starts talking about, well, I want the statistics of this, the kill here, the kill there, How does any of that help you to make a decision when the people you are fighting don't want to give up? So the fundamentals, whether in war or market investing, they're an illusion. Better yet, they're a delusion. You are deluding yourself to think that the more that you study, the more that you read, the smarter you get about making those buys and sells and risk management bets. And by risk management bet, I should use better phrasing, position sizing, money management. How much will you risk of your capital to stay in the game and not go broke and be there for when the trend takes off? Look, for those of you that are in the know, you know. This is reinforcement. For those of you that are new to this style of thinking, this critical thinking where you want to tear apart fundamentals, tear apart the narratives, tear apart the stories, and force the people that are the storytellers to tell us why the fuck they actually think this stuff all connects. Exactly. It's tricky, isn't it? Look, I've said this on this podcast before. I've seen it said, Ray Dalio, one of the most successful investors ever, has said he uses only fundamental information. He has also said that he is 100% automated. Now that's interesting. That's super interesting. What fundamental information does Ray Dalio use, and how is it automated? Because he had to make a decision on what fundamental information is important. How much? And since Ray has not shared with us the innermost workings, we also have to wonder how much of his public pronouncements are trading accurate. Meaning, if he's got the golden goose, how much does he really want to say to us? How much of his truth, which is tied to making a lot of money, does he really want to put out there? But I respect the idea that Ray has said fundamental approach, but automated. That's different. That's very different. And again, I'm not behind the scenes, so I don't know exactly what Ray does. He can tell us what he does, but unless we see the code, we don't know what his entries and exits are. We don't know what his position sizing is. But the vast majority of players that talk about using fundamentals, they are not talking about something automated, because then they're left to narrow down which fundamentals do they want to use. I mean, the fundamentals never end. They never end. What are the fundamentals that you could dream up for Tesla or gold, for example? Tesla, gold, Apple, Google. What fundamental information could you dream up for each of those. Literally, sit down right now and imagine how many different pieces of information related to Apple's future success. It could go on for pages and pages and pages. You could write books about the fundamental inputs regarding Apple stock. But what's important? You could know all the fundamentals in the world, but if the stock is moving sideways, so what? You're not making money. That's the disconnect here. The disconnect is you can be the smartest guy on the planet. Your IQ could be off the fucking charts. You could read everything under the sun. But that doesn't make a market move. If the market's not moving, you don't make money. If you don't make money, who cares? It's irrelevant. You've probably got this sneaky suspicion that I'm going to go somewhere interesting today. I am. I was forwarded a tweet from Larry Tintorelli. Larry has appeared on this podcast multiple times, a very popular guest. In the truest trend-following sense, Larry is sort of boring and sort of dry. Just the facts, ma'am. Very close to Joe Friday in a way, and I say that with all due respect to Larry. Not a lot of bullshit. Because look, the bullshit doesn't really help you. But Larry forwarded me this tweet from some guy. I don't know this guy. I looked him up. Apparently he's associated with a big firm in the US. I'm sure people will be able to figure out exactly who this guy is just by me reading his tweet. So this guy that Larry texted me about was asked by a business school student, asked, what does a typical week look like? And this guy copied his response. Now, this is apparently a Fortune 500 executive involved in making decisions for this large company when it comes to portfolio strategy. Basically, he has to know when to buy and when to sell, how much to bet over a large number of different moving pieces, different markets, different instruments, different stocks. So this guy Connor says, and I'm going to read verbatim, this is his list of what he does. His fundamental way of making it through the week. Here goes. I read 3 newspapers every morning. Wall Street Journal, New York Times, Financial Times, all print editions. I read 3 newspapers. I read 3 newspapers. What the hell? Okay, I got to stop. I got to read more of this before I try and comment on each one. You guys will go crazy. I try to read 3+ annual reports a week, all printed out and marked up. I really try to limit my computer time. Everything is printed out, and I read through it with a highlighter and a red pen. I will print out and read all the SEC filings, presentations, transcripts on the companies I own and the 20 or so that are on the close watch list. I get these emailed to me through Cap IQ at the beginning and end of each day. I only read transcripts, never listen to the live calls. It's faster to read and it removes some biases, focused on what is said, not how it is said. There are less than 70 companies I loosely follow. I read their quarterly reports, but not every SEC filing. I keep an ongoing Word file on each computer I follow. So after reading a call, transcript, or something, I normally write out the key takeaways in bullet points. I have about 15 to 20 periodicals and trade publications I subscribe to. I did a Twitter post on it one time. Just scroll through my feed. I read Manual of Ideas and Value Line. I read a ton of investing blogs, random articles people link to or post on Twitter. I love reading about investing in general, so when people post shareholder letters or John Huber's blog or investment pitches, I also print those out and read them. I'm a member of Value Investors Club, so from time to time, I browse through those pitches. I look at the forums of Corner of Berkshire and Fairfax occasionally, not as much as I used to. I read a book from 3 p.m. to 6 p.m. on Fridays. I do have financial models on the companies I follow, but they are normally pretty basic. I've built 40 tab behemoths in the past, and they are just a mess. I prefer a simple DCF, a simple LBO model, or even a back of the envelope. I do take the KPIs for a company and get those jotted out in Excel going back many years. I have a number of screens set up through CapIQ, but I don't find them super helpful. I get them emailed to me on Friday mornings and I just browse through them. I promise you this ends soon, but it's worth giving it the full listen. I try to only check stock prices occasionally, like every few days. I went through a stretch where I would check them a few times each day, and that is just distracting. I like to talk and network with other investors. Great way to bounce ideas off people, learn about new companies, etc. I talked with John Huber for less than 1 hour yesterday about something, and it was great. Stuff like that happens maybe a few times a week. I have this app on my internet browser called Stay Focus, where I can only spend 20 minutes each day on sites like Twitter, ESPN, Google Finance, etc. Basically the sites that are a waste of time. After 20 minutes, cumulatively, it just blocks me out. You know what I love about Connor's post there? Is at the very end, he knows he's wasting time. He knows he's wasting time on the ESPN, Google Finance, etc. But he doesn't see the wasted time on the other stuff. I mean, how much time is being wasted there? Now, maybe he just purely enjoys all of that, and that's his meditation. He gets off on it. That's his rocks off. I get that. I mean, if that's really what he enjoys. But I don't think that's the story. I think the story is, throughout his life, his early career, into his current career, he thinks that stuff does something. He thinks all that stuff does something. And when I say something, I mean knowing when to buy, knowing when to sell, and how much to bet of your limited capital. He assumes that laundry list of stuff that I just read. And can you imagine yourself doing that? Maybe some of you do. I feel bad for you. My God, that seems boring to me. I'd rather look at a beautiful woman than read all that nonsense. Because whether I read all that nonsense that Connor just mentioned, or I look at a beautiful woman, my ability, because I'm going to make the case here, that a system is the only thing you need. But whether I look at everything that Connor does, or I look at the beautiful woman, I get to the same endpoint, the same final conclusion. How do I buy and how do I sell? How much do I bet? What portfolio am I going to track? And I don't see how I get there faster with a better understanding going down the path of reading the library that Connor reads every week versus staring at the beautiful woman. How does looking at the beautiful woman not get me there faster? My point with comparing to something silly, saying here's Connor's list, here's the beautiful woman, they're both not relevant to making money. But you know, the vast majority of investors, for the first time, maybe even for the second time, maybe for most of their life, would look at Connor's list with respect. They would think that's how it's done when you're a Fortune 500 executive in the money management business. That's impressive. Look how hard he works. That's awesome. I must do that too. And then one day you wake up and maybe you have a conversation with the likes of an Ed Seykota or a Larry Hite, Bill Dunn, a John Henry, a David Harding, a Martin Luke, Jean-Philippe Bouchot, Alex Gracerman, Jerry Parker. Maybe you go down that path and you have all these conversations with all these smart people with track records behind their names. And someone starts ringing that cowbell in your brain. And then you wake up a few years later and you see Connor's list of all the things that he's doing. And I get back to the opening song for this podcast. You feel a little crazy when I think also back to how McNamara was attempting to think of every piece of fundamental information during the war. But that did not help to make a decision. The decisions need to come the heuristic, fast and frugal. What's the piece of information that you can believe in every day that's not tainted, that's just not opinion? I mean, most of that list that I read from Connor, he's just reading opinions of other people. How the hell is that useful? As investors, and as I make the distinction in my book, Trend Following, as traders, because we're all really traders, this investing stuff, come on, unless you buy your house and hold on to it from the day you buy it to the day you die, who the hell's an investor? If you're getting in and out of something, and everybody is getting in and out of something, you're a trader. You are a speculator, period. Anything else is fanciful delusion. And if you're into that, hey, go for it. But when you decide to use price action as your cue, your trading cue, you decide that all of this fundamental information never ends. There's never a top on the fundamental information. It never stops. It never ends. But when you decide to follow price, it's by and large irrelevant. Unless, look, I know if you go to a party and you want to talk with some poor dude or some rich dude that wants to talk about his intimate knowledge of Google or whatever other penny stock that is on his mind that particular night. He's so excited, dressed in his best $5,000 suit, and he will give you the best piece of inside information. The story of why it's now a buy. That's how most people think. But if you can turn all that off and just imagine that you're the guy out on the desert island, literally on the desert island. Your desert island could be on the tropical desert island. Your desert island could be on a house in the suburbs. Your desert island could be a condo in New York City. But you're on a desert island where you say to yourself, I do not have anything other than the closing price each day of, let's say, 50 markets. Now, are you crafty enough, clever enough? If that's all you got, can you trade it? You get a stream of numbers, you get a new number each day. Can you look at that stream of numbers and can you trade it? You see, this is not investing like we think of growing up as kids. This is trading numbers. You're just trading numbers. It's like a game. It's like a little game you might play when you're an 8-year-old boy. It's like playing with math. That's all it is. Some number trick. And then you're looking at the trend of numbers. You're looking at the momentum of numbers because typically things that are in motion tend to stay in motion. That simple idea will make your life so much nicer. Things in motion tend to stay in motion. Now, if that's a truism, what are the rules that you can follow each day of your life to go with that truism? You see, what we're thinking about here is the psychology. How do we trade crazy human behavior? Because, as I've mentioned many times, us human beings are batshit crazy. And taking this simple system of thinking and an execution, but this simple system of thinking of like, hey, okay, all the stuff that Connor looks at each day, this is, by textbook definition, mental masturbation. A very, very consistent form of mental masturbation. Again, if he likes this kind of like I like yoga, okay, I get it. For the vast majority of people, it's not that though. The vast majority of people will assemble this amount of information that Connor does, maybe not as much as he does, but they will go that direction because they think it's necessary. It's mandatory. They must do that. That's how you win. It's not how you win. It absolutely is not how you win. Now, this is just one stab at a podcast episode to bring you into my style of thinking. If you want to dive in more, I implore you to check out my newest edition of Trend Following, all epic 220,000 plus words. I don't know, 600 or 700 pages. It will keep you busy. But I promise you, it has a lot of entertainment in there in the sense that you will have your aha moments. You will go, oh, cool. I see that. I also implore you to check out a resource page on my website, trendfollowing.com/resources. White papers, articles, ways that you can jump in and immediately add to the point that I've been making on this particular show with more detail. Now, unfortunately, I must note, though, my friend Connor, my new friend Connor, actually, I don't know Connor. I'd like to have him on the podcast. I don't know if he will come on now. He might feel like I've beat him up too much. But we all know Connor's not going to go down that path. We know so many people won't go down that path. It's too hard to accept sometimes what is simple. And that in of itself is awesome motivation. The vast majority of people do not want to learn how to think properly. They want to go down the path of insanity, of believing. They want to trust the system. If you want to go outside the system, the opportunity in the zero-sum world never ends. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, Trend Following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.